Oh, might help if I unmute my microphone. Good evening, everybody. How y'all doing? Hopefully everybody doing well, man. We are back for another episode of Tim's Tidbits. I'm sitting up here just talking. I'm over here just talking away. Let me turn my fan on. Give me some little ventilation up in here. Give me a little ventilation going on. Turn this way. Man, if I set it over here, yeah, I can set it here. I can put it here. I could put the fan here. And it'll be out of the view of the camera. That's what my fan look like. My fan look like this right here. I ordered it off of they be getting me. You know how like the Home Shopping Network used to get our parents back in the day. Now the Instagram ads be getting me. They get me every time. Instagram and YouTube ads, they get me every time. And every time I order this stuff, I ain't gonna say every time, like this one here. This nice but this ain't it don't do what they was advertising it's supposed to do. It's a nice little fan, but this ain't gonna cool down no room to make your AC stop blowing. when I opened the box, I said, man, this little fan, this is not gonna cool down no room. They need to stop that. They need to quit that. What they advertising. And I turned it on. I said, most definitely. This is most definitely. It's a cool little fan to put on your desk. Nice little fan to put on your desk, but that ain't fun to cool down no room. Hey, man. If this is first time tuned, man, what in the world did I hit? I didn't hit something. My nails are I need to get nail clip. I don't know if y'all can see that. Y'all probably can't see. They probably ain't gonna focus on it. How they do it like this right here. But I don't know what I hit, but my nail is like flat, jagged, cut, chipped off, piece of nail chipped off. I don't know what I hit my thumb up against, but I keep scratching myself. I keep cutting myself. And I did it like in the last 5-10 minutes. But I keep scratching myself. I'm trying to, y'all know how it is when you got a little piece of nail that stick. I'm trying to get a little piece of nail off so I stop scratching myself. Oh my God. Oh my God. Security. We've been infiltrated, security. I was just about to share the Zoom link in the chat. And I see that someone is in the chat by the name of the Intelligent Observer. Thank you, Intelligent Observer, for the $5 super chat. But unfortunately, I'm not going to be able to share the Zoom link today because the Intelligent Observer is in the chat. And I don't want any riffraff in the Zoom. I don't want any riffraff in the Zoom. Hey, man. Hey, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. that's your big spider. If you know hablo español, don't get upset. It's just big spider. That's all it means, big spider. And as you saw in the slide prior to me showing my face to you all that you are in tune to another episode of the intraday price action recap, as it says right there. As it says right there. Now, this episode of the intraday price action recap is being brought to you by what? The Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript, if I move myself out of the way, you can see over there, it's your step-by-step guide to actionable financial insights. It will be dropping on August the 6th, which is my birthday and my youngest son's birthday. If you are part of the gang, if you have been a part of the gang, meaning the ones that pay for the Discord service through WAP prior to May 27th, 2025, you will have access to it for absolutely free. Why? Because it's just a all-in-one, how can I put it? It's everything that I've ever talked about on this YouTube channel in one place, one course, if you will. That's why I call it the Smart Money Manuscript. It's going to start from the beginning, talking about what is the stock market? What is a stock? What is fundamental analysis? What is technical analysis? What are options? What is swing trading, day trading? What are futures? What are ICT concepts? Everything that I've ever talked about on this YouTube channel, it's going to be in the Smart Money Manuscript in nice bite-sized chunks, digestible chunks to make it easily understood. All right. And if you, like I said, gang, that's been part of the gang, paying for the Discord through WAP, that is, it will be available for free. I will not be blocking my blessings. There will be a link out there, gang, if you want to purchase it, right? It will be going for the low price of $69.99. Right, $69. I want to just make it $69, right? Because I had this cool little thing in my head, right? It's because it's my 53rd birthday, right? And it's my son's 16th birthday, and 53 plus 16 is 69, right? So I just wanted to make it $69. But you know, there are perverted people in the world like the Intelligent Observer. So I just didn't make it 69 because I didn't want them to pervert it. And then I was told by marketing experts that if you put prices on things, that it's better to have like a 99 or 98 or a 15, just anything that's not like a round number, right? It's a mental thing, right? So that's why I threw the 99 on it, because I didn't want people like the Intelligent Observer to pervert it. Now, that's Smart Money Manuscript. It's coming August the 6th on my birthday and my son's birthday. Yeah, y'all go pick it up. Y'all go pick it up on August 6th. That'll be a nice birthday present to me. Gang, like I say, you have access to it for free. There'll be a link available for you if you want to purchase it, for just to say, hey, Tim, I appreciate you, I want to purchase it. If you want to purchase it for your friends and family, if you want to purchase it for, you know, anybody, you know, it'll be out there inside the in the Discord, if you want to do that. Now, before we get into the price action, I've pinned the Zoom link to the top of the chat, right? For the low price of $997.99, limited time, only 13 hours. No. None of the false, what do they call? When I was in business class, I took a few business classes when I was in school, because it's like, I just took a few business classes, right? And it's called, it's not, is it urgency? That's not urgency. It's something when you act like it's like not many left and it's like only a little bit of time. I can't remember what they called it, like the marketing tactic. None of that. It ain't none of that. It's you know what I'm saying? It's out there. I'm not pretending like it's a limited sale, limited slots. I ain't got time for the foolishness. That's not my thing. I do. That's not my sense of urgency. You're right. Okay. Appreciate that. I got the scarcity. That's it. Scarcity. That's it. Urgency and scarcity. Make it seem like it's not a lot and you got to act fast or you're going to miss out. Scarcity and urgency. That's it. Why is my camera still off? Why y'all ain't telling me my camera was still off? I'm kind of glad the camera was off because I scratched my nose one time and what made me realize my camera was off because I scratched my nose and I looked over there to see if it looked like I was picking boogers and my camera was off. But did price do anything today that caught you off guard? I got the link pinned to the top of the chat for the Zoom link for the Zoom. Feel free to pull up on Zoom, unmute, and ask your question. If price did something today that you were like, hey, that was peculiar. Why did price do that? I wasn't expecting that. Right? Did price do anything today that caught anybody off guard? Y'all let me know. Well, I see who up in here. Besides the intelligent observer, thank you again for the $5 super chat. Do they still call them super chats? I don't know if they still call them super chats. I was on somebody's Tremaine. I was on Tremaine's live stream and they had these little fancy little crowns on the thing. I was like, hey, I want crowns on my live stream. I don't see crowns on my live stream. I want to know how, Mark, how do you get the crowns? You are a YouTube influencer. How do you get the crowns on your chat when the people had the little crowns next to their names? How do you get those? Maybe I'm too small. Maybe I'm just a peon and they didn't give me crowns because I don't have enough followers. Right? Y'all got, hey, like and share this so they'll give me. I want crowns to be in next to people's names. I think those are people who subscribe. You got to go to YouTube Studio and create it. What? Create it? Man. No, man. I just want the crown. The people with the crowns next to the thing. Yeah. No, man. You don't know what you're talking about. Get off my live. I'm talking about the people with the crowns, man. Crowns, man. Oh, who in here? I seen Deborah was in here. What's up, Deborah? I see Yolanda up in here. I see Lump up in here. I see Slater. I see Kim. It looked like it says that thing is blocking my view. While I'm trying to look up under the pinned comment, like that's gonna help me see. I'm doing like this right here, like get out the way, pinned comment. Kim, Sarah, Rhonda Green. I see Venus up in here. Hi. I see Steve up in here. I see Sonia. What's going on, Sonia? I see more numbers than I see names, but them all the names that I see, so that's all I'm gonna say. Nobody unmuted or nobody dropped anything in the chat, so I guess everybody expected price to do what it did today. So hey, there's no need for us to do a price action recap. Hey, thank you for tuning in to Tim's Tidbits. Until the next time, decide to get on Algos. I'll just play. We're going to look at the price. Even though price did exactly what everybody expected, nothing, price didn't catch anybody off guard. Who said no? Here to learn to share. Talk about no. Um, even though price did exactly what everybody expected, we still gonna look at price. Today is Monday, the first trading day of the week. So let's go. Let's go up. Let's go look and see what is going on. Let's go up to a weekly chart. This is the first day of the week. Right? This is the NQ. Okay. Looking at, hold on for a second. I don't like how this is showing up there when it shouldn't be showing there. All right. Okay. All right. Nope. Still showing something that it shouldn't be. I hit that before. Yes. Oh, I think I drew that out while we was talking about something today during the trading because it's not in my TDA folder and it's not named. So I think I drew that out while we was talking about something today. All right. Okay. Now, looking at our weekly chart. Oh, speaking of the weekly chart, I noticed this last night on the first Sunday Q&A. I don't hang on. Do I be hanging up on y'all? Do I be hanging up on y'all? Somebody in the chat, I ain't gonna call their names, right? They ain't calling no names, but somebody in the chat said that I'll hang up on y'all in a heartbeat. Do I just be ending the live stream? Is that true? Is that true? Do I just be ending the live stream? Some can somebody answer this for me? Is that true? Do I be ending the live stream like just out of here? Somebody said that I be ending the live stream. I don't know. I don't think that's true. I noticed this last night on the Q&A last night. When we have a holiday, you see that Venus said that ain't never happened. Hasn't happened to me yet. So I don't know where this is coming from. I don't know
It's
where
subject to happen. It's subject to happen now.
I don't know where this is coming from.
Whoever put that out there, they know.
If we don't participate, you know what I'm saying? Like,
Yeah.
I don't know where this is coming from. Now, we had a holiday on Friday, right? And typically, like, if you look here, if I hover, oh, let me turn my fancy dancy on, right? Move these crosshairs. Right. If I hover over last week's candle, it says Monday, 6/30/25, right? Because last Monday, the first day of the week, right, was the 30th, right? That was a normal trading day. This was our week, the 30th through the 4th. Okay. The 4th was a holiday. All right. The 4th was a holiday. So there was no trading on Friday. Okay. When I hover over this candle here, it says Monday, 7/7/25. Okay. Follow me. I'm going somewhere with this. That's today. Today is Monday, the 7th. Right. That's this week's candle, right? Because on TradingView, the candles get their timestamp from the beginning of that candle. Some platforms like NinjaTrader and a few others, they get their timestamp for the candles for the end of the closing of that candle. But TradingView does the start of the candle. Okay. Tim, why are you saying all that? This is elementary. Stick with me, grasshopper. Stick with me. Right? So we all know that Michael teaches something called a new day opening gap and a new week opening gap. Right? So your new week opening gap is when 1 week ends, the difference in price between when 1 week ends and the next week begins. Your new day opening gap is the difference in price from when one day ends and the next day begins, right? Talk about the futures date, the close at 5 and the open at 6 p.m., right? The next day, the close at 5 on Friday or whatever the last day is, and the open on Sunday, right? The start of the week, because Sunday evening is Monday's time, right? So if you have a holiday on Monday, right, your weekly candle starts on Tuesday, right? Your weekly candle starts on Tuesday, but the weekly open, right, starts on Sunday night at 6 p.m. If Monday is a holiday, that Sunday night open at 6 p.m. and all of the trading during Monday is included in that Tuesday's candle. And that opening price at 6 p.m. on Sunday is your weekly open. All right. Now, let's do this right here. I'm going to mark out the difference between last week's close and this week's open based off of the weekly chart. All right. And I'm going to mark this as a bullish new week opening gap. Okay. We tracking it. Everybody tracking so far. All intervals. Now, I'm going to hide this for right now. I'm going to hide it. Right now, I'm going to go down to a daily chart. Right. And I'm going to mark out, you see right here, this says Thursday, 7/3/25, because last week, Friday was a holiday. So Thursday was the last trading day, right? And this candle right here says Monday, 7/7/25, because Friday was a holiday. Okay, Friday was a holiday. Now, on the daily chart, I'm going to mark out where Thursday opened and where this Monday candle opened, right? And I'm going to mark that as a bearish new week opening gap, right? Remember, the other one was a slightly bullish new week opening gap. All right. Now, I'm going to hide this, right? Now they got that hid. Now, I'm going to, I don't need today, right? I don't need today. Now I'm going to go down to a 5-minute chart. I'm going to drop down to a 5-minute chart, and this right here, if you look here, right, this candle right here that I'm hovering over, right, this is the close at 1 o'clock on Friday, right? Because the market was open up until 1 o'clock on Friday. It opened up at 6. I'll show you in a second, right? So I'm going to mark this out here. So the close on Friday, right, to the open on Sunday, right? Close on Friday to the open on Sunday, right? And now Friday was a holiday, so this open really don't make no never mind. But I'm just marking it for giggles, right? And I'm just going to make this. I'm going to make this like a orange color, right? This is just for giggles, okay? And then if we come back over here, All right. If we come back over here, right here at 1:15, right? The market closed at 1:15 on Thursday, right? The market here we are. This is the 110 candle, right? So there's a 5-minute candle. So this candle closed at 1:15. So the market closed at 1:15 on Thursday, 7-3, right? And then the next time it opened was 6 p.m. Thursday night for Friday's trading, that holiday trading, right? So if I put a orange box there, right, in between that time, right, that's an orange box between Thursday's open and Friday, and Thursday's close in the afternoon and Friday's open in the evening. Follow me. We going somewhere with this, right? Now, looking at that, if we squanch this up, right? If we squanch this up, all of this right here, from this red candle there, all the way over to that green candle there, right? This is the holiday trading, right? This is all the trading. We're going to make this that's a good color there. Made it blue. That's the holiday trading, right? All of that holiday trading would be inside Monday's candle, right? The start of the week. No harm, no foul. Now, let's go back to a weekly chart. There's the weekly chart, right? I'm going to turn on all of my different gaps, right? Turn on all my different gaps. Now, looking, oh, I got to turn this off. Now, looking at, right, the weekly candle, right? Remember this little, let me move this gap right here out of the way. Right, I'm gonna hide this gap for a second. Hide that. Remember the bullish new week opening gap that we marked out? Right, there it is right there. That's in line with let's change this to a different color so you can see it good. If I get on the right one. Yes. Trying to do something to make it clear, more visible. Uh-oh. Oh, I was on the wrong one. I was on the wrong one. There it is right there. See, that's in line with, that's the Thursday to Friday's open. What the new week opening gap from Thursday to Friday's open. That's what's up there. That's that one that we highlighted there. Right? But if we go to a daily chart, right? Go to 1 day. Okay. If we go to a daily chart, the new week opening gap is that big. It's a different open for Monday. Right? It's a different open for Monday. Right? It's a total different open for Monday. Right? And that right there, that opening price there, that was the difference between Friday and Sunday. Right? So on the daily candles, the daily candle is opening up at the difference between Friday's close and Sunday's close. But the weekly candle, which both says Monday, the daily candle says Monday the 7th, and the weekly candle says Monday the 7th, it's showing the difference in the open between Thursday and Friday. Right? I've never seen that before in my life. Why am I putting so much emphasis on it? Because if you mark out new week opening gaps and new day opening gaps on your charts, this is something that I've never seen before. I've never seen a new week opening gap have two different ranges based off the weekly and the daily candles. It's always been the same. Now, we do have holidays in there where you be like, okay, we got a 6 p.m. open on Friday. I mean, we got a 6 p.m. open on Sunday. We got a 6 p.m. open on Monday. It's two different opens, but it's all the open between the opening price of the week is always in the same spot on the daily and the weekly candle. Right? It's the first time I ever seen two different ones. Just want to put that out there. I know that was a long roundabout way to explain it, but hey, I'm a visual learner, so I want to show you visually what was a goings on. All right, now that we done wasted all that time, let's go down. And my what's the name? My fan just died. I had been using it for a while, and it just died on me. So I'm going to be hot. I'm going to be hot. I got dog it unplugged. I wonder will it still wonder will it come on if I got it plugged up. Oh yeah, it does. It come on. I just ain't got nowhere to sit it because it got a short cord. Yeah, hold on. I got a trick for it. Let's fuck this out. I want this little janky thing to charge my iPhone. Okay. Yes, it is charging it. So now I can put my iPhone cord on there. It's got a longer cord. Then I could put it back up. I could put it on the desk over here. Now, I'm cool again. All right. Sorry about that, y'all. I'll be all over the place. Y'all know I'll be all over the place. All right. So looking at 15-minute chart, like we said, this right here is the holiday trading right there on Friday. Right. All of that happened on Friday. Right. This right here is what happened today, starting 6 p.m. on Sunday. Right. That's the 6 p.m. Sunday candle right there. Right. So this is today's trading. This is Friday's trading. And all of this right here is encapsulated inside the daily and weekly candle. Right. The candles look different. You got two different candles. Right. But all of, oh man. So it won't stay on. It don't stay on while it's charging. It started, it was blowing, but it won't stay on while it's. Uh, it won't stay on while it's charging. Well, I thought I had found the secret to success, but it won't stay on while it's charging. So it is what it is. Now we're gonna get back to what we're supposed to be doing. I'm sorry, y'all. I keep I'm bumping stuff and knocking stuff out the socket, so I gotta fix stuff. All right, sorry about that, y'all. All right, so we got all this right here is encapsulated in the weekly, and all this is in the weekly candle, and then the daily candle is this portion right here. When you look at the higher time frames, right? Even though when you look at the higher time frame, all of this is in that weekly candle, and when you look at a daily candle, this is the only thing you see, right? When you look at a daily candle. All right, so over the holiday, after making new all-time high, the ES made a new all-time high also, right? The ES had traded up into a new all-time high also, right there. This was like all-time highs over here. The ES had traded up there. Did I delete that line? Look like I deleted that line. Anyway, we were looking for the ES to make new all-time highs, right? It was like, hey, once the ES make new all-time highs, we're going to see if we get some type of retracement. Then the ES made new all-time highs on Friday. And then on Thursday, and then on Thursday and Friday's trade. No, Wednesday. Thursday. Okay, Thursday. And then on Friday's trading, right? We started getting the retracement, right? So made new all-time highs, and then we retraced back down, came all the way down to the lower quadrant of Thursday's daily range, right? If I put this back on Thursday's daily range, like I had it early this morning when we were watching price, right? This was our current dealing range that we were looking at this morning when we started watching price. Right, as you see, price came all the way back down to the lower quadrant of Thursday's um, daily range, right? So this was the dealing range that we were watching, right? This is the last Thursday's range is the last expansion leg of our current dealing range here, right? From last week's low up to last week's high, right? That's our current dealing range, right? Not just because it's a weekly range, but because this is we took out sell side liquidity there, creating a new liquidity pool, and we took out buy side liquidity here when we made all-time highs, creating a new liquidity pool, giving us a new bullish dealing range. This is the current dealing range that price is in. Okay, whenever price has an expansion inside the dealing range, right? You focus on that latest expansion of the dealing range until price trades outside of it. right? And so when we came in this morning looking at price, we see that we were inside the latest expansion leg. So this is the in which happened to be Thursday's dealing range. So this is the dealing range that we were working inside. All right. Last night at 6 o'clock, we opened up roughly right there at equilibrium of the dealing range, right? This is 50% of the dealing range, this red dashed line there. Don't know if you can see it, but that's 50% or equilibrium, right? We opened up right in the middle of the road, traded up to close to the upper quadrant. This is the upper quadrant of the dealing range. This is the lower quadrant of the dealing range, right? So we flirted around equilibrium throughout the entire night, throughout the Asian, throughout the London, and coming into 9:30, right? Mark out the 9:30 open. This is our 9:30 open right here. Right. So that's our 9:30 open there. Right. That candle there. That's our 9:30 open. So throughout the Asian, London, and coming into the New York morning session, right? Price hovered right at equilibrium, right? We went up to the upper quadrant, came back down, right, into this area of consolidation there, traded back up to equilibrium, poked up above equilibrium, dropped back down, taking out the sell side here, traded back up to equilibrium just above it, right? After midnight, above midnight open, traded back down to equilibrium again, went back above midnight open, taking out the buy side liquidity, right? Traded back down, coming into the 9:30 open, right? We traded up to the midnight open at the 9:30 opening candle, right? We traded up just above the midnight open, then we dropped down, taking out the sell side. We spoke about how price had been looking heavy, but it was in the middle of the road. So this is where price is engineering liquidity. We're in the middle of the road. You can see that price is stuck in between the upper quadrant and the lower quadrant of the dealing range, staying right there at equilibrium, just engineering liquidity. All right, we got a bearish Judas swing at 9:30 open, going up, right, and then dropping down below the sell side. We took out some short-term buy side on a lower time frame than this 15-minute, right, then dropped down, taking out sell side, even on this 15-minute, taking out sell side. All right. So just looking at price, how price is trading here, right? Using the benefit of hindsight, because we're done here and we can look back at the price and study it, right? What do we see? Even in the midst of a very difficult morning session where I told the gang, once we got this Judas swing and it did something on the lower time frame, I said, hey, I don't like this price action. Don't like it at all. And we commenced to just chop slopping for the rest of the morning, right? As you see here, all the way up here into 12:15, we finally broke out of this range right here at 12:15, right? But for the rest of the morning, we just chop slopping, taking people money, right? But even in the midst of this chop slop, look at price closely, right? We gapped up, right? Gapped up. Once we gapped up, we opened here, then we traded up above the short-term buy side here, trading into an imbalance up there. Okay. I ain't even gonna go farther that way. Just looking at what we can see. Traded above some buy side liquidity. Right. Once we took that buy side, we expanded down and took out the sell side. Right. This is for the current, this is the current day, because this is a new opening of a new day at 6 o'clock. This is the current day. Right. So we go and we take out some liquidity from a prior session, and then we drop down, and then we take out sell side, right? So right now, what does that give us? That's giving us a bearish dealing range. Why? Because we took out liquidity here, new liquidity pool. Then we took out liquidity there, right? New liquidity pool. But you say, Tim, we still, yes, we do still got liquidity down there, but we can have dealing ranges inside dealing ranges, okay? So you can already see prices in a sell program right now, right? And then we create a new bearish dealing range right here, okay? Then price trades back up there, creating new liquidity pool here, right? And then we trade down and we take out the sell side, right? So now we've extended our bearish dealing range, right? We've extended our bearish dealing range, and we have internal buy side liquidity now, right? We have internal buy side liquidity. We talked about this this morning on the morning call, right? We got internal buy side liquidity right there. Okay, even though we're hanging out at equilibrium, right in the middle of the road. So now, right, we've extended our bearish dealing range, right? Price is still in a sell program. We talked about this morning. We said price is in a sell program, but it's just not favorable price action right now. We're looking to see if it wants to continue up or go down, right? So we're in a sell program right now. Price trades back up, right? Creates relative equal highs, right? This look like it's exact equal highs, but it creates relative equal highs, right? We trade down into the 545 BISI, right? Above this balanced price range, right? We got buy side, sell side delivery here. Then we leave that area, right? If we run a Fibonacci tool from the lowest low to the highest high, leaving the balanced price range, you can see that price drop down into a discount, into an imbalance. Then it traded up, taking out the buy side liquidity, right? Once it, and this taking out internal buy side liquidity, right? Remember, that was our high, that was our low. Took out internal buy side liquidity, right? And then it dropped back down, going into the 930. We got a bearish Judas swing, and that bearish Judas swing did what? Extended our bearish dealing range, right? Gave us a new liquidity pool down here, up under this low, taking out that low right there, right? And then in the midst of this unfavorable, because here, this is when it got very unfavorable, right? Price came all the way back up, back above midnight, right? Back above midnight, did not take out that high, right? And we talked about taking out this high right there on the 15-minute time frame would make price definitely be bullish, right? Right. So we traded back up, way back above this high there, right? When it's like we did something in here, and I say I don't like this price action. Then we end up trading all the way back up above midnight. Then we came all the way back down, didn't take out the low, traded back all the way back up, right? Almost to equilibrium. Then we came all the way back down and extended the bearish dealing range once more. So now the bearish dealing range has been extended once more, right? And then going into the London close, right? Going to the London close, we start to rally, right? Start to rally going into the London close. Didn't rally all that far. Then going into lunch, right? From 11:30 up until 12, we rallied all the way back up, right? Did not take out this high from 10:15, right? Came up there, just about made it to equilibrium of that Thursday's range again, right? And then price dropped down, right? From 12 to 12.15, drop down, extending the bearish dealing range once more, right? So now our liquidity pool rests here, right? And remember that's this extending this bearish dealing range right here. That's today's price action, right? That was the last time we took out buy side, you know what I'm saying, outside of a dealing range, right? We never went outside of this high right here. Only thing we took out was internal buy side when we traded above here, right? Internal buy side, we traded above there. Then the rest of the time, only thing we did was engage sell side, right? Even in the afternoon, right? Price wasn't the prettiest, right? It wasn't the prettiest, but we chopped around a little bit here, going into 130 at the afternoon open. We traded up into this 12.15 SIBI, right? And that right there would be your afternoon opening range high right there. I can just eyeball that because that's on the 130 candle, and there's nothing that's higher than that, right? And then our 2 o'clock candle is here. So our afternoon low would be the same candle. Our afternoon opening range low would be the same candle because the opening range is the first 30 minutes of the, God dog, what's going on? Is the first 30 minutes of the session, right? And this is our 2 o'clock candle there. There's no low that's lower than this. So our opening range high and opening range low was created on the first 15-minute candle of the afternoon, right? Remember, this is where our liquidity pool is resting right now, right? We haven't traded down into that yet, right? We create our opening range. Then at 2 o'clock, at 2:15, should I say, right? This is our 2 o'clock candle there. So at 2:15, price dumps, comes down into this 1 hour fair value gap. Gang, this is the one that we marked out. Remember this morning when I said I'm going to mark this out on the 60-minute time frame? I said I'm going to mark this out because this right here is the discount BISI, right, above this balanced price range. When we was trading up here, we was like up here, and I was like, look like prices coming toward the daily low, right? Because it was in a sell program. So the target was the daily low. I called that the daily low. If you took that trade, put a one in the chat. Gang that was on the call this morning know it. They get that joke. That's an inside joke right there. If you was on the morning live stream, then you get that joke. You understand what that is. All right. Hey, JMC, say it with your chest. What you retract the statement for? Why you retract the statement? Say it with your chest. What did it say? Hey, and then okay, so that's the BISI that we marked out. Because whenever you have a target for liquidity, you always want to know how far can price go beyond your target. It be a high or low. When you're at all-time highs, you have nothing to look up and to the left to. But when you have price above you or below you, right, you look to the left, you look down and to the left, say, okay, how far can price go past this daily low? Oh, there's a 60-minute fair value gap right there on top of this balanced price range, right? There's a bullish breaker right here, right? This is stuff that whatever you choose to mark out. I don't mark everything. I typically only mark the imbalances and the liquidity, right? I typically only mark the imbalances in the liquidity, but I notice breakers, order blocks. I talk about this all the time. I want to see this order block support price. I want to see this breaker, you know what I'm saying, resist price. I talk about them, but I don't mark everything out, right? Mark your chart the way you want to mark your chart. Okay. Then as you see right? We dropped down at 2 o'clock, right? We dumped at 2 o'clock, came down below the upper quadrant of that BISI, failed to get to consequent encroachment. Did we hit that breaker? Let's see if we hit that breaker. Yes, we tapped the breaker right there. We tapped the breaker. See right there? Boop! We tapped the breaker, the bullish breaker there, right? If you don't know what the breaker is, right? Price came up, made a high, price dropped down, made a low, price traded away. That's your breaker right there, right? This last up close candle in the move up right there. That's the highest wick, highest up close right there. That's your breaker right there. We tapped into that wick right there as we drop down into the breaker also. Right. Then let's go back to 15-minute candles. Right. Once we dropped down and took that low out, what did we do? We extended our dealing range, our bearish dealing range, extended it out. Right. The bearish dealing range here, we extended it out. All right. And then we rallied back up, right? Came almost to the lower quadrant of Thursday's range, but we have traded outside of that range. So now we're no longer watching this as our dealing range. We're looking at the entire dealing range now because we've extended outside of the latest expansion leg. So now we run our Fibonacci tool here. Let me hide this quadrants on this fair value gap because that's really messed with my eyes. Right. And as you see, we came back up, right? We came back up above equilibrium of the entire range. And then we closed the day right there at equilibrium, right? If I stretch this out here, this is the close right here. That right there is the 445 candle. That's our 5 o'clock close right there. So we closed the day off right there at equilibrium of our dealing range, right? And then you see here, we're still hanging out right here at equilibrium of the dealing range, which is also right there at the opening range low from this afternoon session. All right. So even in the midst of a very difficult day, right? Even in the midst of a very difficult day, you can see that they can't stop the algorithm from being the algorithm, right? What makes a day like this difficult is old Phil over there with that variable X, right? Tim, what's the variable X? The variable X is manual intervention, right? Because the algorithm is going to give you a signature, and if price does this, then it should do that, right? But if price does this, and then Phil steps in and hits the button, right? It can do that when it shouldn't. And then he hit the button again, and then it can do that. And then hit it again, then it can do that. But inside all of that, it's going to be the algorithm, as we saw inside here. It's doing exactly what the algorithm does inside this difficult price action. But you never know when Phil's going to go in there and hit that button and stop it from taking that daily low, right? Although this morning we talked about that daily low being a target because we was in a sell program. Look how long it took to get there. It didn't get there until after 2:15, right? Right here at 9, right here. Let's go to the lower time frame and look at It ain't got to go to the lower time frame. We can look at it on this 15-minute time frame, right? 15-minute time frame. Remember what we said? This right here was our dealing range. We went up, took out buy side liquidity, got a bearish break in market structure right there. You got a fair value gap here, fair value gap there. 9:30, right? We open up, we trade up into the bearish fair value gap. We drop down and take out the sell side liquidity, right? Once we do that, right, we trade to the imbalance and drop down, taking out the sell side. Once we take out that sell side, there's no reason for price to rally all the way back up here, close there, open the next candle, then rally all the way back above that candle again. There's no reason to come back up here at all, right? The only thing up here is liquidity. There's no reason to come back up there. That's manual intervention, because the algorithm already showed you I'm trading back into a premium and then it drops rapidly, taking out the sell side, right? I'm ready to go. There's no reason to reverse and come all the way back up here and close up there, right? Unnecessary, right? Right here is when price, once we took that out, let's go to a 1 minute time for up. Let's do this right here. Let's knock some of this off. And we'll come over here. Then we'll go to a 1 minute chart. All right. So now looking at a 1 minute chart, right? Price opens up here at 9:30, right? We trade up, right? Taking out internal buy side. This is when we came up above midnight into the 15-minute SIBI, right? So we're moving to a premium. We're taking it. If you're bearish and you're looking to go to the sell side, what do you want to see price do first? Engage buy side, trade up, take out buy side liquidity, right? We take out buy side liquidity. When you want to get short on the day, where's the best place to get short? At or above the open. We go above the midnight open. That's the open of the algorithmic day. We're above the 9:30 open. We're above the session open. So we're above two key opens. We're in a premium, right? And we've engaged buy side. Okay. Once price drop, taking out this low right here, right? We create a SIBI right there, right? When price trades back up, we should hit this SIBI and drop, right? Not saying we got to go straight to the sell side. Not saying we just got to go straight there, but what the algorithm has shown you, I've taken buy side, I've taken sell side. That's a bearish Judas swing, retrace back up into the imbalance after leaving this balanced price range, right? And it should go down, but no, once it traded here, field hit the button, and then price reversed and went back up to the buy side again, right? Field hit the button right here. That's manual intervention, right? Manual intervention. Field hit the button and we went back to the buy side, right? Manual intervention right there. Now, if you would have just taken this trade, right? Yes, you would have got your head bust if you would have just taken this trade. There's no doubt about it. But Tim, how can you not going? You don't know when field gonna hit that button. You never know, right? You never know. That's why you set things in place like, okay, it's certain times when I'm not going to trade. When is the most manipulation happening? Between 9:30 and 10, that first 30 minutes, that's when the most manipulation is happening. Do it always happen between 9:30 and 10? No. A lot of times there are some beautiful setups between 9:30 and 10. But if you allow that opening range to play out, right? If you allow that opening range to play out, like let's put it on 30-minute candle there, right? And so I'll just use these that's there, right? That's the opening range high. That's the opening range low. Okay. go back down to 1 minute candles, right? So now we let our opening range play out, right? Now we got our opening range high, our opening range low, okay? And now all of the, well, I ain't gonna say all of the, but the time when the heaviest manipulation, right? When we get the heaviest manipulation in that first 30 minutes, right? Right. This is when we anticipate the heaviest manipulation from 9:30 to 10, right? Why? Because retail traders chomping at the bit, trying to jump in and chase shorts, chase longs. We gap down. Let's chase the shorts. We gapped up. Let's chase the long. They coming in, chomping at the bit to get in. So they getting wrecked during this time. This is when the most manipulates. But when you let the algorithm establish a range, right? Now you got an algorithmic range that has been established, right? An algorithmic range that has been established. So now that we've established this algorithmic range, okay, now you wait for it to engage one side of the liquidity, right? Right now, price is in a sell program. You would prefer that it engages the buy side of the range. Why? Because when you are bearish, you want to see it take out buy side liquidity first before looking for a reason to trade, right? But in this case, what does it does? It engages the sell side, right? Okay, it engaged the sell side first. Boom, sell side is engaged. Now that it engaged the sell side, right? If you're bearish, you want to see it take out buy side before trying to look for entry. If you're advanced enough to trade against the grain, right, you can trade against the grain to go back to a specific buy side, buy side, right? So in this case, well, what buy side would you be looking for, right? Would you be looking for class participation? Oh, I just knocked down my I said clap. Hey! Class participation time. Would you be looking for internal or ex? Would you be targeting internal or external buy side? Let me know.
Internal.
Internal buy side. Very good. Very good. You're going to be targeting internal buy side. Why? Because you're not bullish. So you don't want it to engage the sell side of the range and then turn around and go all the way back and take out the buy side, because now you're looking at a potential reversal and you haven't reached your sell side target. Okay. So after we take the sell side, right, the market chops around for a while here at the sell side. Okay. And then we start to get a little bit of displacement here, right? Got us a fair value gap there. Got a little fair value gap that we traded back down into there, right? So as we come up here, boom, right? Take out this buy side, okay? This right here, I like to call this right here a shift in sentiment, right? Why do I like to call that a shift in sentiment? Because these highs didn't take out a low, right? This high right here took out a low. So trading above that high is what I call the break in market structure, right? This right here is a shift in sentiment, right? So we get a shift in, that's just what I call it. People call it a break in market structure. Ain't nothing wrong with calling that. But the reason why I say shift in sentiment is so that I know we left the liquidity before that structure break. Breaking market structure, we took the liquidity before that structure break. Why is that important, Tim? Because now I know over here I got a mitigation block Over here, I got a breaker, right? Because we took liquidity or we didn't. Like it lets me know what price did. It left some liquidity, right? If I want to know when it left that liquidity. Why? Because I want to know why it left that liquidity. Is it going to come back to it soon or later, right? I need to know stuff like that. So we get a shift in sentiment here. Then we trade back down to the order block. Boom, right? Tapping below that sell side one more time, right there, right? Tapping below the sell side one, but we trade back down into the order block. The order block blocks price, stops it from going down, right? We trade back up here and get a bullish breaking market structure right there, right? There's your bullish breaking market structure. There's your entry off of your 1157 fair value gap. And then price rallies up and takes out the internal buy side liquidity. Boop, right there, right? And in this case, it did not trade up through it, right? It didn't trade up through it. It just went into the rejection block, right? So if you had your target set at that high, it wouldn't have taken you out, right? But it traded up into the rejection block, right? And then price dropped it like it's hot, right? Coming down, giving you, right, your bearish breaking market structure there. And then it traded dilly-dally back up and inside the range, all in the range for all of the afternoon, all of the lunch and most of the afternoon before trading down and reaching the daily low, right? So this right here would have been a very long, very painstaking, very ugly trade to sit through, right? If you entered off of this fair value gap, if you entered off of breakers or whatever you want to enter in off of over here. But if you entered on this fair value gap, it was a very long trade to sit through. If you came in the afternoon time and entered in off of the fair value gap after the afternoon session starts, then it wasn't so bad, right? It wasn't so bad. It was a pretty, you was in it for a little while, but it wasn't as bad as if you got in over here during the lunchtime. Okay, so we set the range, right? Took the low out, right? Engaged buy side liquidity, right? Got internal liquidity there, right? Entering down here, you got this liquidity, and then we got above the rejection block, got the liquidity above those bodies, right? We know that there's liquidity resting above bodies. That's the purpose of the rejection block. But if you was waiting at the high, you got water in your eyes, right? So engage the sell side. Now that they engaged the sell side, we're bearish, looking forward to engage buy side. Took out the buy side here, took out the buy side in the rejection block, and then we eventually came back down into the sell side. Very long, very ugly, but let the algorithm establish the range, let it engage one side. Your narrative is bearish. Let it take out liquidity, let it displace away, and then enter. Even though it's ugly, it still played out, right? Letting it establish the range. That's all I have for you. Do you have any questions for me? Hopefully, hopefully, hopefully. Oh. All right. I don't hear nobody saying nothing. That's what Michael be saying. Phil. He be talking about Phil as the person that's in there pressing the buttons. He called him Phil. whenever he talk about manual intervention, he always say Phil's in there pressing the buttons again. He called him Phil. Just like Carl from accounting. Carl from accounting, he's just that co-worker that don't nobody like. Whenever he be talking about having a 9-to-5 job and you don't like your job, he always say, you got to go to work and deal with Carl from accounting. Carl is just that co-worker that don't nobody like. And Phil is the person with manual intervention. Hey, man, I appreciate y'all for hanging out with me. That's all I have. Remember, Smart Money Manuscript. That's what it say over there on the screen right there. Coming on August the 6th. $69.99. If you're in the gang, you'll have access to it for free. Like I say, not blocking my blessings. Be a nice birthday gift for your boy. Purchase the course, if you want to call it a course. It's not really a course. It's a Smart Money Manuscript. It's your step-by-step guide to actionable financial insight. All right. Actionable financial insight. Who want to sneak peek into something that we're gonna talk about in the Smart Money Manuscript? Anybody?
Everybody.
Let me
Hey, Phil.
Hey,
I heard.
What was that?
I don't know.
I thought that was
Sound like
over there with
somebody
you.
said Timmy. I thought somebody said Timmy, but look,
Oh.
I heard you ask yourself a couple of questions, but I ain't hear little Timmy Rogers. I ain't hear you respond to little Timmy Rogers. You ain't say, I'm glad you asked that question, little Timmy Rogers.
Look, I ain't even know little Timmy Rogers pulled up. I ain't even
Yeah, you
hear.
actually you say, so what's the Smart Money Manuscript? And then you ain't say, I'm glad you asked that question.
Oh, and like I done got so used to little Timmy Rogers popping up, man. Man. Let me see here. Let's what I got in my recent folders. What I'm just gonna pick something that's in my recent folders here. Fundamentals. How to start. Nah. Let's do this is something that's important for everybody. This is something that's important for everybody. So I'm going to share this right here. Right. I'm going to share this right here. All right. Oh, man. I forgot to change that right there. I'm glad I did this. Hold on. That's not right. That shouldn't say that. That's back when I had it with the dumb name that y'all didn't tell me about. Is that it? Yes, that's it there. All right. That's when I had it with a dumb name. This is important, right? Everybody need to know this right here. I'm not gonna go full blown into it, like full course material, right? But people ask me this all the time. And this is more so in the vein of for people who want to be they want to manage their own retirement portfolios, or if they don't want to manage it, they want to be able to know that your financial advisor, hopefully they're a fiduciary, they're not pulling the woolly cloth over your eyes. They're not, they're not trying to snow you, right? They ain't trying to pull the woolly cloth over your eyes, right? So this is in the vein of that right there, right? How much should I save, right? Every person gonna have a unique number, right? And you want to know that exact number, right? You want to know that exact, don't speculate on it. Well, Tim, how am I gonna know that exact number? I'm glad you asked that question, little Timmy Rogers, right? Because I'm gonna tell you how to get that exact number in here, right? And once you get that exact number, save and invest for that number, and then enjoy life. Don't save a penny more. Don't go, oh, whatever your number is, save for that number and then enjoy life with the rest of your money. All right. Don't be sitting having a whole lot of cash sitting in a savings account, because a dollar that ain't moving is a dollar that's losing. Right. Don't try to over save. Don't try to over invest. Don't have yourself in a save for that number, not a penny more. Well, Tim, how do I find my number? I'm glad you asked that question, little Timmy Rogers. Right. There's a site called ssa.gov, right? And you got something called finra.org, right? Got a free retirement calculator on it, right? So ssa.gov, that's going to give you, right, what what your trajectory is right now, right? It's what your trajectory is right now. ssa.gov. Anybody can go there, right? When you go there, right, you put in your information, right? You put in your information, and this was mine when I did it. Whenever I did this years ago. When was that lump? 2021. When I first doing Tim's tidbits with all y'all on Zoom.
It was a minute ago. I'm not sure exactly when.
But yeah, this was mine when so if you go to ssa.gov, right, and then you put in your information, you go in, it's under your social, your information, you sign in, and it knows all of your work history, right? It knows your work history from your entire life. As long as you've been paying taxes and you've been working at a real job, it knows your work history, and it shows you, right? It shows you exactly what your numbers are, right? It shows you you put in your expected retirement age, right? Average future annual salary, right? All that stuff being there, and it shows you based off of, if you don't change nothing right now, right? This is what you are going to be getting if you retire early. This is what you're going to be getting if you retire on that age that you put in there. And this is what you're going to be getting if you retire however many years later, right? This is going to be your monthly benefits, right? These are your exact numbers, right? And then FINRA.org, right? At FINRA.org with their retirement calculator, right? You go in there. Let me blow this up a little bit. It's kind of small, right? It says, how much do you already have saved, right? These are just numbers that I plugged in just so you can see what's going on with it, right? And it say, how much will you need after taxes each year to cover all your living expenses, right? You put that number in, right? What is your annual expected income received from other sources, right? I said monthly, but it's annual, right? This is because it says monthly over there, but I plug this number right here in there, right there. It says monthly because it's like monthly money, but that's the number that I put in there, right? Put whatever, right, you want to put in there. And it says, will the income be taxed? Like, yes. You put in your current age, you put the age you want to retire, right? You fill it in, right? Inflation rate, whatever the inflation rate is, right? I put it 4.5, you put it higher if you want to make it strain it a little bit more, right? Current tax rate and retirement tax rate, right? You can put it higher to make it strain a little bit more. And then average returns, I put 7%. They always do that, right? And it put like the what's the name? And then when you click on it, it tells you exactly what you need to get to, right? It gives you it gives you your exact numbers. You need to save 29,000 in your first year, right? Because remember, I put the monthly price down there in the annual spot, right? So it's thinking, oh, I'm only getting $1,900 a year. So it gave me a lofty amount that it said you need to save 29,000 in the first year. And yada 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 yada. It tell you your exact number that you need to save for. And once you get that number, right? Once you get that number, this is some other stuff. I ain't gonna get into all that. That we're gonna stop right there. But once you get that number, right? That's what you want to shoot for. You don't want to go, you don't want to go overboard, right? You need to save this much the first year and then increase your savings by the inflation rate until you reach the retirement. So if you come in here and you'll say you need to save $10,000 the first year and then increase by the inflation rate, map it out. Sherwin, hey baby, we need to save $10,000 a year and increase by 5% every year. So that means $10,000 divided by 12, we need to save this much per month. Yeah, but between saving and investing, that's what we need to make every year until we 67. Right? That's your number. Don't try to overboard. You got your exact number that you need for retirement. And with that, that's a little piece of stuff that we're going to be talking about in the Smart Money Manuscript. That right there focuses on, I just shared that one because I'm like, this is important for everybody, right? Even if you don't pull up on the Smart Money Manuscript, that's something that everybody need to know. Everybody need to know that if you're going to be a trader, investor, you ain't going to do nothing but just give your money to a financial advisor. You just going to put money into your 401 at work, your IRA at work. You ain't going to worry about no self-directed IRAs or nothing like that. You need to know, what's my number? What's my number I need? That's very important, right? That's why I just want to share that one. Out of everything that I'm be talking about, hey, everybody need to know that. I appreciate y'all. Do y'all got anything for me before I go? It's 7:30. I know y'all probably hungry. I'm hungry myself. Anything for me? Did y'all like that? Was that helpful? Did y'all learn anything out of that? Or did I just waste y'all time? Was that helpful? Oh man, I don't see nothing in the chat. I just waste y'all time. Waste y'all time. Oh, Steve pulled up with the much appreciated. All right, Steve. I see a couple hearts flying up. I see a yes. Okay. I don't feel so bad no more. I have never seen that site. I'm glad that you learned something new. Because when my financial advisor told me about that, I was like, hey. First time I talked about that was at Discipline Over Dollars when I did a free financial literacy workshop at the public library. Pulled up for 3 months, 1 weekend per month, pulled up for 3 months. That was one of the things that I taught in that Discipline Over Dollars workshop. You're welcome, Deborah. Hey, Deborah, thanks for pulling up and joining, sharing your commentary with Sherwin with us on the stream. Everybody said they appreciate you pulling up and speaking like that.
What? What you? My commentary.
Y'all, who heard Deborah talking about what her and Sherwin needed to save?
I did not.
Rhonda said, I remember the library days and the Come Up Cousin episode. They did. I heard. See that? Rhonda heard. Run it back. Run it back. You ahead.
It was somebody they needed to save 10,000 plus 5%.
Yeah,
Yeah,
yeah.
yeah, I heard that too.
Yeah.
What?
That's what it was. Let me see if I can find it. Hold up. Where we at? Here we go at. Save for, and once you get that number, right? Once you get that number, this is some other stuff. I ain't gonna get into all that. We're gonna stop right there. But once you get that number, right? Can y'all hear that? That's what you want to shoot for. You don't want to go, you don't want to go overboard, right? You need to save this much the first year and then increase your savings by the inflation rate until you reach the retirement. Here it is right here. So if you come in here and you'll say you need to save $10,000 the first year and then increase by the inflation rate, map it out. Sherwin, hey baby, we need to save $10,000 a year and increase by 5% every year. So that means $10,000 divided by 12, we need to save this much per month. Yeah, but between saving and investing, that's what we need to make every year until we 67. Right? That's your,
so funny.
Don't try to overboard. Don't. So now we know that who wasn't on the stream. Now we know who wasn't on the stream.
I was on the screen, but my grandbaby got me every which way but loose.
Blame it on the rain.
On the
not
baby.
the kids. Hey man, that's it. That's all I got. Hopefully y'all found value in today. And I especially hope that y'all found value in how to find your exact number for retirement, right? How to find your exact number for retirement. Hey man, that's it. Like always, I like to say, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's your big spot if you don't hablo Espanol. And until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action, y'all be safe out here in these trading streets, man. Down.